Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 26th of October. Starting off with the FTSE 100, we're in this potentially in this falling trend channel there from the end of September. Top of the channel there around 70.50. Recent swing low around 68.60, and not really much, not really budging far from that range at the moment. RSI faded just near the neutral 50 level, so that could be potential signal that we've got another leg down, but the main feature here, the price action rather dead. End of day close above 70.50, and we're looking at the 50-day moving average around 71.60, which is also the area of initial September support. Moving on to a market that I don't really look at very much here, but here it is anyway. The S&P just breaking that line of resistance yesterday. That's from August around 37.80. And coming up against the 50-day moving average at 38.75. Need to get an end-of-day close above that 50-day line. In the recent past, obviously, we had that failure just through the 50-day line when it was rising. Now it's falling, so it needs a bit more work. But there's a gap to fill there up towards 40.75 if we can get through the 50-day line by the end of the week. In terms of the downside, 37.70 or so, the support there, that broken resistance line. And that would take us back to 36.50, but we are on the long bias here, given the way that the RSI has broken through the neutral 50 level, contrast to the FTSE, and we've also had bullish divergence after that lower October support there below 3600. So potentially poised there for a move to the upside. Best case scenario, which may be for the end of the year or something like that, if we really get going, would be up to 44.70, which is the top of that broadening triangle from back in May. Moving along to the pound, which seems to have fully recovered from the agonies of last month when we were heading towards parity. And I suppose the way the pound works, the more people say it's going to go to parity, the less likely it becomes. Here we've broken above the 50-day moving average over the last 24 hours, which is great news. That's around 114. Above 114, we've got that resistance line there from February at 117, and that would one would normally think that would be the top of the range after the recovery from 103. But if we do get a decent clearance of 117, we do have the possibility of post-June resistance of 125, which seems unbelievable at the moment. But at least while we're above that 50-day line, there is the prospect, or the possibility at least, of a further move to the upside. On to Bitcoin, which is looking rather healthier than it has done for quite a while. Here we've got a situation where we've had that almost dead price action since June, July, but we've broken a line of resistance there from November, which is very healthy. And we've also broken above the 50-day moving average at around 19,600. Above that 50-day line, the obvious place would be a retest of 22,600, which is last month's resistance, and probably cheer people up. We are backed by a rising trend line in the RSI window as well. So there is a chance here of getting up towards that post-August peak at 25,000 and the 200-day line, even if we then fail again. But the only issue here, I suppose, is just that this market's been in a range for quite some time, and all that might happen here is you just fail at the top of the range and then go back down again towards 18,000. But decent signs there on Bitcoin just at the moment. On to the stocks, and speaking of Bitcoin, a Bitcoin miner, I'm not sure how much mining it's doing these days, but Argo may be helped by that Bitcoin situation. Bounced off the lows there near 12 pence, and there's a gap to fill around 20 pence. So I think if you are not already in it as a recovery, then you'd be looking for an end-of-day close above 20 to then take us up towards the top of that falling trend channel from July at 31 pence, perhaps by next month. But interesting to see if Bitcoin and Argo go up hand in hand. On to a stock which is something of a stock market darling at the moment, Cleantech Lithium. You can see why, because of the move up from 20p to as high as 63 pence, I think it was last month. Here we've just found some support at old resistance, initial October resistance at 47, bounced off that at the end of last week, and an end of day close above the top of that gap there at 53 pence would be enough, hopefully, to take the shares back to the top of the range at 63. Big picture target here, maybe by the end of the year, as high as 80 pence, which is the top of that rising August trend channel. And it has to be said, looking pretty good on this situation at the moment. An extended uptrend line in the RSI window as well, which the shares have obeyed so far. So let's see if we can get that end of day close above 53 as a gap close buy signal over the next day or two. On to Clontarf, which is one of those flying by the seat of your pants type situations. Here you can see that got the 50-day moving average rising inside days for today and yesterday so far. And that's also, well, basically the start of the week has been a collection of inside days. Need to break out now. Maybe if we break above the 0.08.5 pence level, the first inside day, we could have a little spurt up towards 12 or 13.12 or 0.13 over the near term, maybe the next couple of weeks. Stop loss at the moment, if you can manage that, around 0.06 in the 50-day line. Big news from Deepmatter today, and with a high pedigree contract as well. So maybe that finally turned the corner at this situation. I think it was Merck actually, but looking at the chart, you can see that we've got the shares gapping to the upside off the low, which is very nice. What would be even nicer is that we remain above initial October resistance around 0.11 and then head up to the top of that broadening triangle from back in May as high as 0.18. So when the dust settles, maybe that's what we could get, at least initially. Obviously, given how far we've come down, plenty of ground to make up for the bulls there. But 0.18, 0.19 is possible, especially while we hold above 0.11 or 0.12. On to Empire Metals, rather, which had a giant RNS yesterday. Here we're just breaking the high of the gap up day, so that is a pretty good sign there. Bear trap gap reversal, and at least while we're above that broken resistance line there at 1.1 pence, looking for as high as 1.6 pence in the top of that May broadening triangle, and hopefully that could be hit over the next couple of weeks. A nice setup there, even if you missed it yesterday. Going on to a stock which don't normally cover, but I did actually drag this one out, Luceco, and here you can see that we built on that trendline break, which was identified, I think, as recently as yesterday. After the unfilled gap to the upside, it's actually a bear trap island reversal, which is a very nice signal indeed. It shows that it will suggest that the bears have been caught on the hop, and so the buyers as well. We had our initial target there towards 90 pence. End of day close above that, and I think we should snap up to 110 to 115 quite quickly, maybe as soon as the end of next month. MACD buy signal, we've got an uptrend line in the RSI window. All the stuff is going on there, plus basically these very strong candles opening at the low, closing at the high, which we've basically had for the last couple of sessions after that hammer on the 24th. Moving along to Anken Daisy, which is something which is starting to, sort of bubble up a bit, but really hoping that the shares will not only get up to 1.8 pence at the top of the range, but on this occasion, after a decent rebound off the 50-day moving average, then trade higher. As far as what the target would be after 1.8, if that actually happens, obviously we've sold on after any couple of days of rises, we've actually sold back quite quickly. So maybe the pesky seller will come back, but above 1.8, we could be looking towards maybe 3.5 or even 4 pence at that December resistance line projection. But this will be the sort of fourth or fifth time lucky on the break or any potential break of 1.8. Maybe keep an eye on that in terms of having an alert on the price action at 1.9, let's say. On to Oracle Power, which seems to be coming up with decent deal flow on an accelerating basis. Here we've got a line of resistance. Surprising, maybe the shares are near the lows, so lows around 0.21. Need to break that resistance line there from August around 0.22 to give us a 0.28 target, which would be quite a relief after the recent sell-off that we've had in these shares, or at least drift that we've had in the shares over the last couple of months. Finishing off with the Westminster Group, and here you can see that shares are in a rising trend channel. That's been in place basically since February. It's always nice to see those sort of dots, dead dots near the lows. It suggests that the selling pressure has dried up rather, and a sideways shuffle, I call that. And what we're looking for here is an end of day close above the 200-day moving average at 2.1 pence to give us a potential move up to 3.5p maybe by the end of next month, which is the top of that rising trend channel from the beginning of the year. That's it for me today. More updates tomorrow.